InvestSMART separately managed account benefit number 11. No more paperwork. Click on the apply button and go through the 100% online application process, even for self-managed super funds. If you've got the information at hand, you can start and finish in under 10 minutes. If you need more time, your application is automatically saved to your account. For more information or to start a free trial, visit investsmart.com.au.
Hello, I'm Tony Kaye. I'm the editor of Eureka Report. Welcome to Property Point. I'm joined as usual by Nerida Conisbee from REA Group.
Thanks for having me.
Thanks, Nerida, for coming in. Nerida, I just wanted to talk about what's happening in the property market at the moment. It's all a bit mysterious, really, with the figures.
It is mysterious. I mean, we've had the CoreLogic data show that prices have stabilised across capital cities, particularly in Sydney and Melbourne. Clearance rates remain fairly high still, so they're still hitting above 70% in some weeks, well above 70%. Interesting on our site that in April, we saw a drop-off in demand. So, not surprising. We had all the APRA coming out with more restrictions. We had banks increasing interest rates,
Yep.
A lot of negative media. And so, it was as expected. Demand dropped off. But in May, it surged back up again. And although the number of people looking to buy dropped, we also saw the number of sellers dropping as well. So all this bad news isn't only impacting buyers, it's also impacting sellers.
Yeah. Is it just a seasonal thing, do you think, in terms of what the market's doing at the moment?
Look, that's the thing. We can't really tell. And I think we're going through a few months of very uncertain data and very variable data. I mean, certainly the fact that clearance rates remain fairly high does suggest that the higher end of the market is continuing to hold up. And that's often a sign, early cycle of a downturn, that you do see the cheaper properties get hit first and the better quality properties continue to do quite well. So, perhaps we are. I mean, certainly a moderation of prices is a great thing for the market.
As you know, I've been looking in the property market myself recently. There was quite a bit of competition at an auction that I bid on recently. So I think there's still demand out there, but I guess it just depends on where.
Absolutely. I mean, it's interesting looking at my own property situation that we had a house in northeast of Melbourne, and over 15 years the price increased by $700,000, and that included quite a major renovation. The house we've just bought in Sydney 18 months ago has increased in value by the same amount, by that $700,000. So, it has been a very, very hot market, and the fact that things are slowing down, I think, is really good news for buyers, but also not just first home buyers, but also upgraders as well.
Yeah, I take it that really it's the same story. Sydney, Melbourne, very strong. Other markets less so. Some, such as Perth, still fairly weak.
Yeah, look, Perth is still doing it really tough. I mean, we're still seeing very low levels of demand. Peppermint Grove, the most expensive suburb in that market, it has increased in value quite a lot. So, again, there's that flight to quality. Those really great suburbs are continuing to hold up, but the rest of Perth is doing fairly badly. Brisbane's interesting. Apartments oversupply is continuing to be a bit of a concern. So, the sort of investment grade stock in inner Brisbane does seem to be struggling, but it's not impacting houses so much. So still very strong buyer demand for houses.
Yeah, in the apartment sector, talking in Melbourne specifically, there's been a lot of talk. There's a lot of apartments that will be coming on stream. There's a lot of empty apartments in the CBD area and close by. What are you seeing there?
Well, look, I mean, it has been holding up. I mean, like you said, there's a lot still to complete. So I guess we're not through the woods yet, but they've all sold. So, there's no question that the apartments aren't selling, they're selling. It's more around who's going to rent them. Vacancy rates do remain fairly low, so that's a positive. There was concern that there'll be a lot of vacancy, but that hasn't happened. Certainly it's impacting rents, it's impacting prices. So values aren't holding up to quite the extent, but they're not crashing down, so I think that's positive. We're also continuing to see fairly high levels of demand from renters for apartments on our site. So the fact that there's a lot of people wanting to live in these apartments as renters, shows that, perhaps we'll be okay. But certainly a much better situation in Melbourne than what we're seeing in Brisbane.
And just from an investor's perspective, what What do you think is going to happen there? Is that going to start sliding now that the banks have been increasing their interest-only loans?
Yeah, it's going to get tougher and tougher for investors. I mean, it's going to get tougher for them to borrow. It's going to get more expensive for them to borrow. It will be a key determinant of slowing the market. There's no doubt that as soon as the cost of funding increases, we do see a drop of demand on our site.
Well, I think over the next couple of months at least, it's pretty much a bit of a watch and see with the property market.
Absolutely. I mean, we'll be watching June very closely to see what happens, but early signs are that listings have gone up again. So if we do see a continued drop-off in buyers, increase in listings, then it does support less price growth over the next few months.
Yeah, so we'll wait for spring and see what happens then.
That's right.
Thanks very much, Nerida.
Thanks for having me.
I'm Tony Kaye, the editor of Eureka Report.